Welcome to the meeting of lecturers Financial Accounting and Reporting Analysis. By starting with, I'm going to introduce you our table of content contained 5 sectors of the presentation. To start with, I'm going to be introducing the elements of activities and business model. So Lecturer is a technology company founded in 1973 and headquartered in Paris. The general activities of the group are CAD software and CAM cutting room system for industries using soft materials. Second is the development of the software and hardware. Thirdly is a consulting and associating service for organization in fashion, apparel, automotive, furnitures, and others. Next, go to the business model of Lecturer, which considered mainly as B2B service, but it will also contain a small number of B2C. The small street pillar of the Lecturer's business model is distribution of business activities over the market sectors and geographical market, with cycle that differs from each other and the vast number of customers worldwide. Second is a balanced revenue mix between revenues and software license, equipment and non-recurring revenues, and recurrent revenues. Thirdly is the generation of the significant annual cash flow. Next, I'm going to discuss the strengths of Lecturer's business activity and its business model. So first, we'll consider the robustness of critical Lecturer's solid business model, which provided with high revenue generatability, which in 2020, which flow amounted to 25.2 million euro, and exceeding the amount in 2019 by 7.6 million euro. Second, the revenue of recurring contract amount, as aforementioned, is 73% of the total revenue, which is really strength can prove the robustness of Lecturer's solid business model. And the objective revenue earning constituted can be protective factor has mitigated the impact of COVID-19. Last part is about the analysis of the question. So Lecturer has 3 strategic sectors, which are fashions, automotive, and furnitures. But however, due to COVID-19, all the 3 sectors have been strongly impacted. So the furniture market experienced a rebound starting in the 3rd quarter. Still, there have been significant downs. The recent acquisition of Gerber Technology by us has been a further step of Lecturer's 4.0 strategy, which is leading to the creation of the leading global industry 4.0 player in the strategic sector. It also can allow Lecturer to be more competitive and influent player in the market.
As said previously, Lecturer develops software, hardware, consulting and associated services for organizations. Indeed, several elements of his financial statement demonstrate this. Financial statements consist of assets, and in this part you can see the non-current asset of tangible fixed assets. In practice, this means that Lecturer has several buildings or offices where it operates its business. Further information on Lecturer's activities are available in Note 1 of the financial statement. According to his business model, Lecturer is based on 3 pillars: global presence, customers and products, and services. With these pillars, we can say that Lecturer has a service activity towards its customers, and it has a industrial activity towards its products and services. In Lecturer Financial Note 9, we can see the section Fixed Asset Purchase in 2020 and in 2019 mainly concern computer equipment and manufacturing molds and tools to the Bordeaux Cestas industrial facility. This means the presence of a service activity by computer equipment. To give some general insights regarding the past performance of the group, we analyze some changes from 2019 to 2020. And in the balance sheet, we can see a decrease in goodwill of minus 1.79%, a decrease in leasing rights of use of minus 17.48%, and a decrease in total assets of minus 0.77%. As far as the income statement is concerned, we can see a decrease in revenues of minus 15.65% and a decrease in profit about minus 14%. In the cash flow statement, the free cash flow has decreased of about minus 30.5%.
Now let's talk about performance evolution. The consolidated net income for 2018 was 28.74 million, a 1.8% decline from the previous year. Although operating income climbed by 2.5%, net income did not increase because of foreign exchanges and was at a loss of 1.12 million euros. With just a 1.9% rise in sales between the periods and no changes in the way revenue was created, the difference in sales was small. The gross profit increased a little by about 0.8%, but there was no noticeable difference. The group's overall performance was positive, with higher revenues but lower predicted net income for the year due to costs compared to the prior year. The course of 2019 mirrored that of 2018, with the cost of goods sold and revenues both falling by 0.9%, rebalancing the gross profit at an actual rise of 0.8%. The decrease in the foreign exchange loss that had an impact on the income statement from the previous year was primarily responsible for the operating income's 1.5% increase and the consolidated net income's 2% increase at the end of the year, which was close to about 30 million euros. The group's overall trend was positive. Costs fell while profits rose, giving the group more margin. In 2020, the COVID-19 pandemic happened. However, Lectra was able to cushion the pandemic's impact, concluding with a consolidated net income of 17.6 million euros, still representing a 40% drop. The firm was able to accomplish this objective thanks to a strong rise in software subscription sales. However, orders witnessed a declining trend. A drop in revenue can be noted with a difference of 15%. Due to the firm saving 4 million euros in cost of goods sold, gross profit actually increased compared to the predicted one. Nonetheless, the team struggled to control R&D expenses, which climbed up from the previous year rather than down as anticipated. This had an impact on the operating income, which fell short of expectations and was 37% lower than the year before. The firm did a great job overall at controlling costs and deferring all needless expenditures for the year, as seen by the cash rise of 11%, which is one of the greatest in recent years.
This group has three main sources of funding that can be found in this financial statement. The first one is the amount of retained earnings added to last year's retained earnings. For this, we need to compute the net income. Net income, as you can see on the table below, is calculated by gross profit plus financial income minus all costs. Now, to get the retained earning of this year, you take the amount of retained earning and income minus income of the year 2019, and then you take the retained earning and income of the year 2020 and subtract the income of the year 2020. So you get only the retained earning of both years, and then you subtract the retained earning of 2019 to the retained earning of 2020 to see the difference. And the difference amounts to 18.355 million in 2020. So that is the first source of income, of finance. The second one is an internal source of financing, which results from the sale of financial assets as well as tangible assets in 2020. The proceeds from these sales amount to 4.648 million euros for the sale of financial assets and 26,000 euros for the sale of tangible and intangible assets, for a total of 4.674 million euros. As you can see on the table, where does value come from? The third source of financing is a long-term source of financing. It is a capital amount from the issuance of shares on the stock market. In January 2020, the market opened with a total of 32,099,100 shares on the market and closed the year with 32,511,100 shares. This issuing amount to a total of 12,501 shares, which is equal to 412,551 euros. As you can see on the table, the total amount of shares that has been sold in capital acquired to the company.
Coming now to the accounting policies and the analysis of that. Lecture that the preparation of the financial statement based on the IFRS demands and judgment of management for the periods of our investigation 2018, 2019, and 20. And all of them had the same accounting policies, except 2020 there was a modification in Amendment 16, which was the COVID-19 related rent concession. And this enables the group not to consider certain rent concession at lease modification. The amendment applies to all rent concession and impacted the group's consolidated income statement by around 200,000 euros. It's reported by recognizing a right of use assets and a liability, and all corresponding to the present value of the future lease payments. The right of use asset is assessed at cost and includes the initial amount of the lease liability plus any lease payments prepaid to the lessor, net of any incentives received from the lessor. Liability again is the present value of the future lease payments over the term of the lease. The lease liability measures by variable and fixed lease payments, payments by lessee for residual value guarantee, and penalties. The lease contract has to be reassessed when there's a change of lease term or a modification related to a reasonable degree. What is not accounted for in the balance sheet are short-term leases, so lease term less than or equal to 12 months, and leases of low value item where the threshold is at 5,000 euros. What we want to advise the group lecturer is, and also make them think about potential management decisions. At first, if it even should be a lease or a purchase, because sometimes a purchase has more advantage than a lease, because the cost is all at once, and you don't have the future payments related to the present value. Then you should think about the duration of the lease contract, and also the choice of the interest rate, because the higher the interest rate, the longer the present value of the future lease payments. Also, what is really important is the obligation of the residual value guarantee. Is it even important to the company? And last but not least, we should classify what are exactly the right of use assets, because it's not really 100% certain what could be a right of use assets, and the company could include assets what you originally would not thought could be a lease contract. All of that we want to make the company think about. And thank you for your attention and your time for listening to us about the analysis of lecture and our thoughts on it.